Introducing iCapital, where you can get investment advice on the go. It is accessible via app and website. Subscribe now to iCapital for stock news. iCapital is reliable because they thoroughly research listed companies, economies, and stock markets. iCapital provides a clear perspective of how markets interact and how it influences your investment. When investors and traders are debating whether to buy or sell their stocks, fret not, as iCapital will recommend Malaysian and global stocks. iCapital is available on Apple App Store, Google Play Store, and Huawei App Gallery. Download it now.
Hello, good morning everyone. I'm Fitra, your host for today. Welcome to our weekly Facebook and YouTube Live. Don't forget to follow us on our social media platform, Facebook, Instagram, Twitter, LinkedIn, TikTok, and also to subscribe to our YouTube and also our iCapital .biz for investment advice on the go. So during the live session, if you have like any question or comments, or you have like any suggestion to share with us, feel free to comment down below. And today here with me, Teng. Good morning, Teng.
Yeah, good morning.
You look so stylish today.
Oh, thank you very much. I didn't, not wearing an iCap t-shirt, so the iCapital brand is missing, right?
Yeah.
So must replace. I can put it on my head.
So nice.
So I hope it's okay. I hope you all can see the iCapital brand.
Okay, so today, our topic is very interesting and quite serious on economy things. So recently, Bank Negara Malaysia has increases the OPR rate to 3%, and according to BMI, Business Monitor International, it will leave the overnight policy rate at 3% for the rest of 2023. So, do you think will Malaysian economy remain resilient?
No, maybe we can ask the people who are here today what do they think, whether Bank Negara will maintain the official policy rate at 3% for the rest of 2023.
Yeah.
Right? Now it's May 2023, so we have another 7 months to go.
Yeah.
What do you all think? Do you think that the OPR will be
Remain.
maintained at 3%, or will it be increased, or will Bank Negara have to reduce the OPR in 2023?
Yeah. And
Right.
share your thoughts in the comment section.
Yeah, let us know. Maybe we can do a quick survey and see who said what. I mean, what is the majority thinking?
True. You can comment whether you think like the OPR will remain or increase or maybe decrease for the whole 2023.
Yeah, because we still have another 7 months to go. Still a long way to go.
Yeah.
Yeah. So you want the participants to
Comments?
give their response, right?
Yeah, true.
Okay. So do we want to wait for their?
Yeah, because we got one Lai Yok Beng. He said like depends on the US market too.
Mr. Lai cannot. Mr. Lai, you must choose. You must choose whether
It will remain.
Yeah, whether you stay at 3%,
Yeah.
or whether the OPR will be increased and whether the OPR will reduce. Maybe you can give out of the three possibilities, you got to choose
So
one outcome.
Anthony Liu said maintain the OPR. The
Okay.
OPR will maintain. And
Okay.
Kuai Lai Tan, definitely no change this year. BNM
Okay.
is always slow to react.
Slow, not low.
Slow to react.
Yeah.
And Yap Seng Teo increased OPR.
Okay, so far we've got four, right?
And
one is not sure, two say maintain, one say increase. Okay.
And Paul 777 will remain.
Okay, so another one that is remaining.
Yeah.
Any more?
And then Yap Seng Teo increased OPR.
Okay, increase. So two increase,
Yeah.
three maintain, one reduction.
And Yuan Peng Ong from Facebook maintain also.
Maintain, another one maintaining.
Yeah.
Okay. Wow, we've got a lot of people remaining.
True.
Okay, maybe while we wait for more people to give us their outlook, maybe we can. Well, first thing is, if you read what the media reported, right, local and foreign media, is that most of the analysts a big majority of the analysts were surprised that Bank Negara increased it by 25 basis points. Very few of the analysts expected Bank Negara to increase. On our side, in our iCapital, we already expected Bank Negara to increase partly because our official policy rate is way behind the US federal funds rate. The gap is very wide. So we meaning Malaysia, we cannot leave the gap between the OPR and the federal funds rate too wide for too long. There are a lot of major side effects, a lot of adverse consequences that can result from a gap that is too wide and for too long a period. Right? So the Bank Negara had to catch up. Even though in the last two meetings, Bank Negara did not increase the OPR. Yeah. So the majority was expecting, majority was surprised. We were not, and I guess our reason is simple. First thing is the differential between Malaysia's OPR and US federal funds rate is too wide. In fact, after Bank Negara increased by 25 basis points, the federal funds rate also increased by another 25 basis points. So the gap hasn't narrowed. The gap now between the two is about 200 basis points or 2 full percentage points. That is very wide. That is, if you go back to the 2008 global financial crisis, which was caused by America, the gap between the OPR and the federal funds rate was not as wide as now. So now is almost unprecedented. And then you have a situation where a global and local condition where there are a lot of uncertainties, a lot of question marks, where people just not just people, central bankers themselves don't even know what is happening, don't even know what they have to do.
True.
Do you have any other?
Yeah, we have some more. Well, a lot of our viewers commented. So, Seong Sanwi said it will increase.
Increase, okay.
And then Wai Chun said it will remain.
Okay.
Eng Hong will remain. And Leon Song will increase.
Okay. So majority is on the remaining side.
Yeah.
Right? Okay, our take is this. There are multiple angles to look at when you talk about interest rate, right? In the case of Malaysia's OPR, our view is that, or at least my view, whether it's Capital Dynamics view or Tan Teng Bu's view, is our view, right? Is that Malaysia's OPR would have to increase by another 25-50 basis points in 2023. Not because Bank Negara wants to, but I think because Bank Negara in the next 6-7 months would have no choice. Now, why do I say that? In our latest newsletter, which we're sending out today, right, and which we wrote a few days ago, this was before the U.S. employment report came out. The April employment report for U.S. came out on Friday night, last night, right? This was our outlook was before that. We were saying that the Federal Reserve will not be able to cut the federal funds rate in 2023. Majority of people, of analysts, expect the US Federal Reserve to pause in their recent May meeting, or even expect the Federal Reserve to start cutting interest rates in the second half of 2023. Our view is very different. We don't see the US Federal Reserve pausing. We think that the US Federal Reserve will be forced to increase US interest rates by maybe one more time, two more times. And like Jerome Powell says, their policy is data dependent. That means they look at economic data. Now, their FOMC meeting, the last one was a few days ago. After that, the US job market came out with a report that was not only showing that the US labor market is still resilient, but what it's showing is that wages are the wage increase is starting to re-accelerate. Right? The latest hourly earnings was quite worrying because the market expected 0.3% increase. I think went up by 0.5. So with that kind of strong labor market, re-accelerating in the wage growth, the US Federal Reserve would be in a very uncomfortable position, right? Because you have labor market strong, you have a banking crisis which is worsening in America, and you have inflation, especially the core inflation. The headline inflation has fallen mainly because of energy price. That's all. You take that away, you look at the core, which is X, energy and food. It actually hasn't dropped. And now you have a labor market which is still strong. So the gap between the policy objective, the Federal Reserve wants inflation to be at 2%. The current core inflation is about 5 to 6%. That's a big gap. Right? So you have to bring down, the Federal Reserve has to bring down the core inflation down to 2%. And the US Federal Reserve has already increased their interest rate 10 times. It is the most aggressive monetary tightening the US has ever undertaken. Not only have they increased their federal funds rate 10 times, the US Federal Reserve has shrunk the balance sheet, the central bank balance sheet, by every month they're shrinking the balance sheet by about 95 billion US dollars, which is a lot of tightening. So you have balance sheet tightening, quantitative tightening, you have interest rate rising, and yet the labor market, the other worrying thing about the latest job report is unemployment rate fell in US. It fell to 3.4%. Right? So what's going to happen? Wage growth is reaccelerating. Unemployment rate is even lower now. Core inflation refuses to go down. I think the US Federal Reserve in the coming months, for me, interest rate cut is out for 2023. So the question is whether the US Federal Reserve, there's another meeting of the FOMC in June, whether they increase by June or July another 25, 50 basis points. I think the financial markets are not ready for it, but we are expecting more rate hikes from the US. Now, if that's the case, the gap between the US federal funds rate and our OPR is going to widen further. It's really at its widest for a long time. It's going to widen further. Now, that's going to impact the forex market, right? Okay, the ringgit has strengthened from about 480, 474, 475, 480 to down about 445, right, against the US dollar. It has stopped appreciating. Now, if I am correct and the financial markets start to think that, oh my goodness, the US Federal Reserve is facing an economic situation which is very messy and inflation is not coming down, and therefore I got to start increasing my interest rate again for the 11th, the 12th time, then the US dollar is going to strengthen again. And the ringgit will weaken again. Now, then what do you have? In the case of Malaysia, our inflation, especially our core inflation, is also not going down. It's also very stubborn. And the last 1 year or so, I mean, maybe in the last 15 or 18 months, the main cause of our inflation, Malaysia's inflation, is food prices. That is something that is very tricky because it's got to do with whether the weather is cooperating. You know, weather in Malaysia has been, well, not just Malaysia, all over the world has been very strange, right? We've got heat wave, we've got a few children dying in Malaysia out of heat wave, and then schools we may have to stop school because of the heat wave. That's going to have an impact on things like vegetables and so on and so forth. Right? I mean, just look at Europe. Olive price, in the European countries, olive is a very important food ingredient, right? The price of olive in Europe is at its highest in 26 years because there's a very severe drought in Spain. And olive production in Spain has dropped by 40-50%. There's a shortage of olive, right? So now, in the last 18 months or so, the main item that's been making our core inflation at a stubbornly high level is food prices. The heat wave is not just affecting Malaysia, it's affecting Thailand, it's affecting other countries. So that is something that is really beyond the control of any central bankers, beyond the ability of anyone to forecast. All you can say is that, look, the pattern is such that there is a lot of volatility in weather patterns, a lot of unpredictability in climate change, in climate patterns, which means it's going to affect your food supply. And unfortunately, in case of Malaysia, we have never really managed food security, food supply well. We import a lot, we import a lot of rice, we import a lot of mangoes, we import a lot of, I don't know, from Thailand, from Vietnam, and all that. So my take is that core inflation in Malaysia is going to remain high, partly because of food prices, partly because there's no major slowdown, there's no recession in Malaysia yet, where aggregate demand will start to slow down, right? So I would suspect the OPR has to, before the pandemic, the OPR's high was 3.25, now it's 3%. So I think the OPR has a good chance of reaching 3.25 or even exceeding 3.25.
Okay.
That's my take. Now, then the thing is, do we have other people giving the forecast?
No,
No
just
more.
additional from Wai Chun. He said that Malaysia will keep to 3% because you have 6 state election coming and the rakyat will revolt against more.
Yep.
So we have like 6 maintain, choose to will maintain the OPR and 5 vote that
Increase.
the OPR will increase.
Yes, the state election, of course, is a factor to consider, but that is going to be held soon. After that, they can increase the interest rate. And anyway, inflation is something where you cannot, whether it's Malaysia or elsewhere, you cannot manage it for the sake of political reason. That's why, in the case of US, the presidential election is next year. Joe Biden doesn't want interest rate to go up, but no choice because inflation rate doesn't want to go down. And if you look at, particularly in Europe, right, whether it's in France, in Czechoslovakia, Germany, UK, you don't see this kind of reporting in our local newspaper or in the Western newspaper. There are a lot of protests, there are a lot of demonstrations against inflation. Take UK for example. That sorry if I use words that you all may not like. King Charles is having his coronation, which I think is one of the stupidest event to watch. The UK government is spending about £250 million on the coronation of this supposed King Charles. And at the same time, you have millions of ordinary British people who cannot afford to buy the normal food, cannot pay the energy bill. So you have a government and the Prime Minister Rishi Sunak said, wow, this is an event that can happen only once in a lifetime. It can only happen in UK. Yeah, it can only happen in UK because it's such a stupid country where majority of the people are living near poverty conditions, and you spend $250 million to have a coronation of the king? Come on, what kind of democracy is that? And anyway, the king is not even elected. Not like in Malaysia, at least our king is on a democratic basis. Every 5 years you rotate. Theirs is, because I'm so lucky I'm born in their family, therefore I become king, even though I could be an idiot. Right? Now, why are the people protesting against the coronation in UK? Because the nurses in UK have been going on strike again and again. I've talked about this before. The National Health Service in UK is about 115 years old. In the 115 years old, the NHS in UK has never gone on a strike. This is the first time. Nurses, doctors, ambulance drivers, and they cannot afford their day-to-day living. And then here you see watching the king, $250 million all wasted. Wouldn't that money be? I mean, if you want to celebrate your coronation, the King Charles of UK is a billionaire. He's filthy rich. Why don't you take a little bit of your fortune and spend on your coronation, and then the quarter 250 million, save it and give it to the rest of the people? So inflation is a topic that can topple government. In history, if you look at world history, inflation, cost of living, right, has always toppled governments, whether it's authoritarian or democratic governments. And in Europe, across Europe, there's a lot of strikes. So in the case of Malaysia, yeah, you may say 6 state elections coming, yeah, fair enough, I hold back for a while. But after that, if I'm right, and the inflationary pressure doesn't go away, it creates a vicious cycle, right? And talking about that, I think Wai Chun raised a very good point at the political side, because I observe a few things, not just OPR, because there's report that the Malaysian government recommendation, they have asked the Malaysian government to increase the EPF contribution from employer
20%.
to 20%. Boy, I don't know. You know, the worst economic policies to have are populist policy, where you have policies that win votes but destroy the country. Don't forget, look at it from multiple points of view. Yes, cost of living has gone up, right? But that is something is due to multiple factors, right? First thing. Second thing, look at it from the business point of view. After all, what is the economy made up of? The economy is made up of households, businesses, and the government sector, right? So if the business sector cannot survive, the economy is dead. If you look at the Malaysian economic situation, of course, in the last few years, every economy has been affected by the pandemic. Yeah, everybody, every country. But in our case, we have the Malaysian government, whether the current, the previous governments have made a number of decisions which I think are wrong. First thing is, the minimum wage was increased from 1,002 to 1,005. Yes, it has to be increased because our minimum wages are too low. Definitely, I agree with that. It's the timing. Why do you have to increase at a time when it's so tough for everybody? First thing, right? Tough for both sides, the employee and employer. First thing. Then you introduce the new Employment Act, which gives ridiculous type of. First thing is you move up the minimum level to 4,000. Anybody below 4,000 is under the Employment Act, and you cut down the overtime. Yeah, you can improve working conditions, fine. But why this time when a lot of businesses are just starting to recover, right? And then you suddenly announce holidays. 2 days from now, whole country has a holiday. I mean, the CEO of Mindin, I think he was unfairly criticized by the people. Because you look at from Mindin's point of view, I'm a retailing business, right? What is the best time I can have my business? During festival.
Yeah.
Correct? It's like if you look at any retailing business, 70-80% of your sales will come from Christmas, Raya, or Chinese New Year. And Friday is just before Raya. So big chunk of my business is gone. Couldn't the government have planned it better? You can have extra holiday, but it doesn't have to create unbearable costs for one sector of the economy. Is it necessary? It's not the first one. Last year there was another one. What was that? There was elections, right? Because don't know whatever the reason they gave, like another public holiday. So, I mean, every senior manager, every CEO that I've met in the few weeks after the announcement, every one of them criticized the government. Every single one. Because you don't look at the cost on the other side. And then now you want to have contribution of 20%. I don't know. You look at the glove industry is struggling. All the glove makers are making losses. CPO prices has dropped to 3,007. Of course, they're still making good money because it's still at a high level. But then semiconductor is already going to a downswing. You can see a lot of semiconductor companies, their profit have plunged. Unicem profit plunged 80%, right? So you have a situation, and our exports growth has vanished, whether in volume or monetary terms, right? Taiwan, for those of you who are not familiar, Taiwan is already in recession. 2 quarters of economic contraction, right? So, and then Bank Negara may have, out of no choice, to increase the OPR once or twice again. So businesses would have to bear higher financing costs, consumers would have to bear higher purchase costs, demand may be going down, and then you want to increase EPF 20%? No, that's a time to do something, that's a time not to do something. And especially in 2023, if I'm correct, the US Federal Reserve, obviously the US labor market is telling you there's no recession yet, which is precisely the reason why there will be a serious recession later on, because the labor market is so tight, inflation cannot come down, the US Federal Reserve has no choice but to increase interest rate further. The higher you increase the interest rate, the more serious the recession will be, because already certain sectors of the US economy have been affected by that. And the banking crisis, partly due to the interest rate high, partly, and then the commercial property side is already going to melt down. So I think my advice to the government is, please look at all angles. And so far, things like helping out the majority of people is great, but I mean the Malaysian government is in a very difficult predicament, because at the same time they want to reduce the subsidies. Our inflation is lower than what it should be because we got a lot of subsidies and a lot of price control. But price control leads to a lot of distortion, where you get shortage of supply. And the subsidies cannot continue like that, especially if there's a global recession and our government revenue drops. Then where are you going to get the money to subsidize? And especially now, CPO price has come down, crude oil price has come down. So OPR alone cannot be seen, whether you increase or reduce or maintain, cannot be seen in isolation.
Nice. So John Doe said that it will increase further the OPR, and we have like question from Paul 777. Mr. Tan, can you touch on the US banking crisis? How bad it will heading? Worse than 2008 in your point of view?
I commented on this before. It's different from 2008. 2008, the banking crisis was because of mortgage defaults, where mortgages defaulted and so on. In the current banking crisis, it is not mortgage default, it is a mismanagement of asset versus liability at the bank level. And so far, it has hit the mid-sized and the regional banks. Already, you got 4 banks that have gone bust in US. The First Republic was rescued by JP Morgan, but that did not stop the panic. The panic is still there, and I think there are a few more of the mid-sized regional banks that would have to be rescued. And again, how bad, how serious it will get also depends on US inflation rate, which will affect US interest rate, right? Because when the US interest rate goes up further, then you're going to have, it will create credit crunch. That means the banking sector will be very unhappy to keep on lending out, and then your loan defaults will kick in. So then, from a simple banking crisis involving the mid-sized and regional banks, it becomes more serious and maybe even affecting the larger banks. You know, the JP Morgans, the Citigroup, and all those things. So, to see whether the banking crisis will worsen, I will have to look at US inflation and US interest rate.
Okay. So if you have like any other question to ask Mr. Tan, you can comment in the comment section below.
Oh yeah, by the way, whenever the central bank increases interest rate like that, the sector that usually benefits is the banking sector. Because like here, when they increase the OPR by 25 basis points, immediately the banks will increase their lending rates already. So their interest margin will widen, and therefore the banks will benefit. Of course, in the case of Malaysia, bank growth in bank lending has been pretty slow, right? And I'm not sure whether it's going to continue at this rate, but generally speaking, increase in the OPR will widen the interest margin of the banks, and therefore the banks will make more money, which is not a good thing. Like maybe we should have a banking sector tax, where you can tax them and then distribute the money as subsidies.
Teng, I have a quick question, like from me. What do you advise to a young generation and me, with this the increase of OPRs, and what do you think, like if we wanted to own house, we wanted to buy a house, so what is your advice at this moment?
Okay, irrespective of OPR, if you're buying a house for your home as your home, then it's a different decision altogether. Anytime is a good time because it's going to be your home for the next 50 years or even 100 years. But if you're buying for investment, right, to think that you can get certain returns, buying property in Malaysia generally speaking, it's not a good idea because you don't make much money. Unless you have very good locations, right? Most locations don't give you the return because if you buy an apartment, there's huge oversupply of apartments, right? If you buy an apartment, you got to pay maintenance fee. I mean, take an example of a 3-bedroom, 800 square feet or whatever it is apartment in Taman Tun, right? You have to buy, the purchase price is about 800,000, 7 to 800,000, right? And your monthly maintenance is about 500 to 800 ringgit, depending on the quality. So every month you got to pay 500 to 800. How much can you rent? Then what about maintenance, right? And if you're thinking you buy and you think you can make some money out of it, what about the interest repayment? And because of the oversupply, you find that the property prices generally in Malaysia don't go up that much. So as an investment, I've never been a property investor. The only property I have is my house. So I've always, whatever money that I have, I've always invested in the stock market. First thing is I don't have to pay monthly maintenance. Or I don't have to worry that if I'm renting out, that I got a lousy tenant. The tenant doesn't want to pay you. Or worse still, the utility bill is under your name. The water, electricity bill, everything is under your name, and then the tenant just cabut. So TNB Telecom come after you. Right? And then out of 12 months, you may find that your apartment is empty for, 3 months, 6 months. And I got to maintain. If the previous tenant didn't maintain it well, put rubbish there, you got to go and maintain again. Then you got to look for a good tenant again. So I find it a lot of hassle. And it's not leaky. When you want to sell it, when you want to raise money, it takes quite some time for you to find a buyer. Whereas the stock market is so simple, right? You want to buy and sell within one day, you can do it. And the cost of transaction is so cheap. There's so little stamp duty. The commission is so low, and you can analyze the companies. You don't have to worry. If I look at Padini, I look at Apex Healthcare, I look at iCapital.biz Berhad, right? All the information is there. So why would I want to bother with owning a property unless it's my own house? So if yours is your own house, then you have to see who is financing you. You yourself, or your family, or your future husband, right? So, I mean, the cost of financing, it also depends on the type of loan, whether yours is a fixed rate loan or a flexible type, right? If it is a fixed rate, then don't buy when interest rates are high because you're going to be stuck, right? If it's a flexible type, which most banks may not like to give, then when it goes down, they adjust downwards. So generally, the one question you have to decide is whether it's for investment or for own stay. Own stay, go ahead. Investment, I think the stock market, good quality stocks in the stock market is a lot better.
And from YouTube, Boon Yan Lim commented, besides the banking sector, which other sectors do you think will benefit from the increase in interest rates? And which sectors do you think will be the most negatively impacted?
Okay, if you just increase by 25 basis points, there'll be some adverse impact, of course. Those would be the interest rate sensitive sectors, the usual property, car purchases, and those where they have to rely on customers who buy on credit, right? So those are the very sensitive sector. But if it's 25 basis points, the impact may not be that much. If I'm correct and think that the OPR can increase by another 25, another 50 basis points, then the adverse impact will be larger. But then it will be those interest rate sensitive sectors, right? Those which are like implantation, those which are in semiconductor, which are export oriented, they are not really affected by the interest rate change, right? And of course, some companies which are cash rich, then they earn a little bit extra, lah. Not much, but a little bit extra. So overall, you have to see the magnitude of the increase in the OPR, lah. At this point, 25 basis points, the impact is not that much. The banks would be more of a beneficiary, and those who suffer wouldn't suffer that much.
And then, in addition, Boon Yandin also asking, what is your opinion of the Malaysian stock market in the short, medium, and long term?
Okay, our short term is about 8-9 months. That's our short term. So for a lot of people, 8-9 months is long term already. Our medium term is up to about 3 years, and our long term is beyond 3 years. Our long term is like 5 years, 10 years. So I guess when you ask questions on outlook, it's a very fluid question. I say it today, and then by Monday, Tuesday, something happened to US, another banking crisis, everything changes again. But at this point in time, I'm generally not optimistic about the US market. I'm generally not optimistic about the Malaysian market, generally speaking. Of course, there are specific stocks that is worth the risk. But overall, I think if you want to see, you need the inflation rate, especially in US, to be under control first.
I see. And then Tan Han Hui commented, during pandemic, those with multiple properties has trouble to service loans. This year, many developers start to launch new properties. If rate continue to increase, how likely a property recession to continue?
How likely what?
The property recession.
Property recession. Oh, Malaysia has been having a property recession for a long time. In the pandemic from 2020, property prices in Singapore shot up like crazy. Property prices in Australia went up, US went up, UK went up, Europe went up. In Malaysia, property prices struggle. So, and even before the pandemic, I know of someone who bought a condominium in a good location, I think in 2016, about 6-7 years ago, and up to now losing money. So when it comes to residential, especially the condominiums and apartments, I haven't really come across anyone who has told me, hey, Teng Bu, I made money on it. I haven't. But those who are smarter, what you can do is, like in Bangsa or especially Taman Tun, right? There are a lot of single-story terrace houses, right? And that has been, if you have invested in a Taman Tun single-story terrace, you have a good chance of making money because the demand is good and fixed supply. What they do is, now the single-story terrace in Taman Tun is about 1.2 million, a single-story terrace. So you buy, what they do is they buy and then they renovate it and make it into 1.5 story or 2 stories. Right? After 6 months, 12 months, when your renovation is done, then you can sell it at a higher price. That is a different game altogether. That one you have to add in some value. You know that this Taman Tun is a good location, there's a good demand, shortage of supply, and people want it, especially the younger couples. Yeah, they love this time.
Wow. Okay. And Gyap Seng Teo from YouTube commented, cement price and building material prices increase had eat into the margins of the property developers. However, these buildings materials players may benefit.
Yeah, I guess in every situation there's always a winner and a loser, right? So in this case, I think the more important thing is we're looking at the macro point of view. How serious will inflation get? How serious will inflation worsen in Malaysia? Would it? Would the Malaysian government continue to subsidize at this rate? If it does, then what happens to the budget deficit when the next recession hits? No, our budget deficit is about 5.5 to 6%, 5 to 6% of the GDP, right? This is when your economy last year grew at 8.7%, and you had a huge budget deficit. So in the next recession, when your GDP shrinks -2%, then where is the money going to come from for you to have fiscal stimulus? So that's why the government is trying to reduce the budget deficit as much as possible. To reduce that, you have to the big chunk of it is subsidies. You cannot increase tax because our tax rate is really not competitive. We are not getting enough foreign direct investment, right? Because our tax rate is higher than Hong Kong, our tax rate is higher than Singapore, and so on. So that part of it, you don't have much help. So the thing now is, what do you do to make sure that you reduce your budget deficit? To reduce your subsidies. But reduce subsidies means inflation rate is going to go up. Right? And if you don't do all this, then if the recession hits, it's a very tricky situation. And I hope our government has got a good economic steam.
Okay. So I think that's all for today. So
Yep.
conclusion from
Conclusion.
Yeah.
Conclusion is to subscribe to iCapital, www.icapital.biz. It's only 49 ringgit for the digital, 99 ringgit for the print plus digital, because in every issue you get a lot of insights. I mean, it's if you put it as equivalent to A4 size paper, I think every week is about 40-50 pages long. No advertisement, no watch advertisement, no property developer advertisement, no golf course advertisement. 40-50 pages of solid research every week, right? And explained in simple terms. So subscribe to it. I mean, I'm at whoever subscribes at 49 or 99 ringgit, Capital Dynamics lose money because our cost of production is much higher than 99 ringgit. So every new subscriber that subscribes at 99 ringgit, we lose a lot of money. We don't make because the cost of production is like many times that. But read it because you can see that we're trying to educate our Malaysian public, to teach our public, and present alternative views. Right. So in the last 4 issues, the last 4 weeks, we are still writing on Anwar's visit to China. The normal media and so on and so forth would have just give you 1 page, 2 page, 3 page article. That's it on Anwar's visit. We have written in 4 subsequent issues, and each issue we write about 8 to 10 pages long. And it is very unusual. Our analysis is very unique because we look at Malaysia-China relationship, not just from 1974 up to now. We look at Malaysia-China relations a long time ago during the Malacca Sultanate, and how things are like, and why did our Prime Minister Anwar Ibrahim correctly said that when they come to the South China Sea, you have to negotiate. I totally agree with that, and there's a very deep reason why that is the best course of action. Because what the Bong Bong Marcos did, right? He's not Bong Bong Marcos, he's He's really stupid. Like, the way he did. He's now allow US to have 9 military bases in Philippines. Right? That approach doesn't help anyone. Doesn't help ASEAN, doesn't help Philippines, doesn't help China. So what our Prime Minister has done is to say that let's sit down together with China, let's talk, let's negotiate. It's correct. And in our analysis, which, like I said, it's been already 4 weeks, we got another 1 week to go. We explain to you why that is the most sensible and the wisest approach. And why is it that Malaysia-China relationship is a model that other countries can follow. We have different political ideology, right? They have Communist Party, here we got democracy. We got different political systems, right? But why is it that Malaysia and China can have a relationship that is among the most peaceful, among the most stable, even better than other countries?
Okay, so don't miss out. Go and grab the chance to buy the investment on the go as low as 49 ringgit. So, okay, I think that's all for today.
And if you have any suggestions that you like us to talk about, please
Yeah.
send it to us and we'll take it up next week.
Yeah, true. So, and don't forget to follow our social media as well and subscribe to our YouTube channel. Thank you for today, everyone.
Okay, thank
Thanks
you.
for watching.
Okay.
Bye bye.
Okay.